The global financial system has long revolved around one dominant force, the US dollar. For decades, it has served as the world's primary reserve currency, the backbone of international trade, and the standard unit for commodities like oil and gold. But today, subtle shifts are taking place. Shifts that could redefine the dollar's role in global markets. In this video, we'll explore how and why the influence of the US dollar is changing, what's driving these changes, and what it means for investors, governments, and everyday people around the world. To understand where we're going, we first need to understand how the dollar achieved its powerful position. After World War II, the Bretton Woods Agreement established the US dollar as the central currency of global finance, backed by gold. Even after the gold standard ended in 1971, the dollar retained its dominancy due to the strength of the U.S. economy, political stability, and deep financial markets. Over time, global trust in U.S. institutions made the dollar the preferred currency for reserves, trade settlements, and international borrowing. Today, nearly 60% of global foreign exchange reserves are still held in U.S. dollars. Major commodities like oil are priced in dollars, and international transactions often rely on dollar-based systems. This creates a powerful network effect. The more the dollar is used, the more indispensable it becomes. For decades, this has given the United States a unique advantage, allowing it to borrow at lower costs, run deficits, and exert influence through financial systems. However, cracks are beginning to appear in this long-standing dominance. One of the biggest factors is the rise of alternative economic powers. Countries like China and regional blocs are increasingly seeking to reduce their dependence on the dollar. This process, often referred to as de-dollarization, involves conducting trade in local currencies, building independent payment systems, and diversifying foreign exchange reserves away from the dollar. China, for example, has been actively promoting the use of its currency, the yuan, in international trade. Through initiatives like the Belt and Road Initiative, China is encouraging partner countries to settle transactions in yuan instead of dollars. Additionally, agreements between countries such as China and Russia to trade in their own currencies signal a gradual shift away from dollar dominance. Another factor reshaping the dollar's role is geopolitical tension. Sanctions imposed by the United States have demonstrated the power and risk of relying on the dollar-based system. When countries are cut off from dollar transactions, it can severely impact their economies. As a result, some nations are actively building alternative systems to reduce vulnerability to such measures, further weakening the dollar's global grip. Technology is also playing a transformative role. Digital currencies like CBDCs and cryptocurrencies are creating new ways to move money globally, potentially challenging the US dollar over time. However, the dollar remains dominant due to the strength and stability of U.S. financial markets, with no strong global alternative yet. Instead of a sudden decline, the system is gradually shifting toward a multipolar structure where multiple currencies share influence. For investors, this means focusing more on diversification and understanding geopolitical risks. Overall, the dollar's role is evolving, not disappearing, creating both challenges and new opportunities.